Hello, this is a tradesight futures trade recap using eSignal 11 from June 12th, 2013. Pretty interesting setup and move we had today in the markets, and I just wanted to relay how our tools can help us follow up on these and make trades out of them. So here's a look at the that's the S&P E-mini futures contract. This was Tuesday's action right here. You can see this first bar right here is the opening 5-minute bar of Wednesday's action, and this is what we're going to focus on using the cool bar replay feature of eSignal to see how we could have identified where the market was heading from the opening few bars here. And you can see our levels overlaid. One area of concern that you should watch is this shaded area, which is the value area. The concept of the value area is that if you open outside of it like this and you break into it, there's a really high probability chance you're going to cross the entire value area. So in other words, a move under this light blue line here should lead to a move all the way over to this light blue line here. Another thing we obviously have to look at is the fact that the gap from the close of the prior day to the open, 80% of gaps fill the same day. So that's also potentially going to be a drag down in the market. And then we're going to talk about what we call reciprocal range plays and how that played out here. So here's the opening 5-minute bar on the ES futures contract. And I'm going to go into bar replay mode here and show you what happened next. And then we're going to do some measurements to sort of target where this might lead to. So the very next bar is a big bar down. Now, what this indicates to me is that there's obviously that gap fill pull, that energy to the downside. And this sort of sets up the potential for a reciprocal range move. Now, reciprocal range moves are typically stronger when they present themselves right out of the gate, meaning the opening 5-minute bar makes it very clear that you're heading down into the gap. And that's not what happened. The opening 5-minute bar here was a little more relaxed, but certainly we got an open, we tried to go a little higher and failed immediately. That's what that opening 5-minute bar did. Then the second bar definitely took us down a little more sharply. So I'm already interested at this point in what's called a reciprocal range move. And the way that that works is we assume that from the distance from the close of the prior day to the gap up here the next day, if we start to head down, not only are we going to fill the gap and come back to the prior day's close, but we're also going to extend an equal and opposite move in the other direction. So I'm going to take our fib tool off of the eSignal charts. I'm going to mark it to the opening price here of this new day, the 13th, and I'm going to put our 50% retracement line right, and let me expand the chart first a little bit. I'm going to put our 50% retracement line right where the close of the prior day's move was. And the reason that I do that is by putting that right there, and that's the purple line, it gives me a move all the way across to the zero line, that's the blue line at the bottom, as a potential target. Now let's watch what the futures did moving forward once we've got this set up here. So here we go, we kind of breached that value area, and there's a strong GAN level, that's the red line, right inside there. We sort of pause there. We break that. Now we're heading, see the energy that's taking us lower in the market. The volume's holding up down below. You can see what the volume is. And then we pause again. We're inside this value area. Can't rally out of the value area. Another big bar down. And this is essentially taking us to our gap fill. And a lot of people play just for the gap fills alone. But what's interesting is when you can sort of identify that reciprocal energy move in the first 5 or 10 minutes of play, you can sort of predict maybe a bigger move down the road here. And you can see that, yeah, we did stabilize around that gap fill area, which is fine. Even tried to get a little bounce out of it. Okay, but then as we start to roll over here, look what happens. Now we reach the value area low. So we did fulfill, not only have we fulfilled the 80% of gaps fill the same day rule, but we've also fulfilled the 70 to 80% of the time rule, where if you break from outside of the value area to the inside of the value area, you'll cross the value area. We've done that as well. So we had a lot of high probability stuff set up here. And then look at how this continues. Okay? And watch this next move down. This is what's fascinating. Boom. Got a little support right there at the green line, but here we are. Now we've hit the reciprocal range target. So we've now made an equal and opposite move from the open to the gap fill, and then from the gap fill the exact same move in the other direction. That's pretty impressive all by itself. And then let's kind of focus a little bit more. I'll show you one more magical level that we had that's just off the bottom of the screen here. You can't even see it yet. But what happens is we have a level called our lower pressure threshold. That's the purple line. And that's sort of that's a key support level that we teach. There's a lot to that level. But watch what happens here as we get 8 bars down and then 9 bars down. We came within a tick of that level. 9 bars down gives us a seeker or Comer setup phase completion, which usually suggests maybe a relief bounce is in store. But look at this, one little push lower, there it is. touched the lower pressure threshold exactly. That's that purple line. Touched it exactly before we then started to come back up. So reciprocal range plays, value areas, gap fills, the pressure threshold, it's all very useful and played out perfectly here on this particular chart.